Hey ladies and gentlemen, and it's the FTSE UK 100. Haven't done one in a bit, and it's time to have a look at what's gone on. So always reminding ourselves of super macro. Let's go really super macro. Throw on a couple of magic levels that I think are pretty significant. I would say right there, nipping the top here, improving resistance here, here, and here. I've also selected this level here. This was an inverted head and shoulders. You'll see it here that ran there, that had a neckline that just trimmed the tops of previous highs, and was a bit of a support for this lumbering grinding period over here before we dipped. Yeah, so that's all pretty good. And then, of course, many of you will have known that we've done before the larger, the 9,000 call in time. That's a super macro call, by the way, which involves this as a setup over here, and can even involve right back to here structurally wise, which is pointing to a macro bull. Longer run. Listen to that, longer run. So your monthly setups, you can have entire half years. Anyway, leaving all the macro, the really big macro behind, we've had an interesting time. Now I'm going to drop down on the weekly. Also, I haven't become an RSI convert, by the way. It's just there was previous clips done on an RSI, so this will come. The reason as to why this is in will come clear later. You can see that the times it was oversold here once again very early, but nonetheless. Broadly thereabouts, once again very early, getting into oversold over here. So, but anyway, it's not. This clip's not about that. So here's where we've been more recently. This is my grind lines draw. This is rolling away now from this rate of increase, and we did just break this channel. And now I'm not an over big fan of channels, but I do respect grind lines. This for me has been a grind line, and we are on a visit to it right now. Now, what typically happens actually is you reverse back up at least once. You don't always just go straight into the spill. You have you have a little bit of a grinding, possibly a bear flag. That can occur. We'll come into this again a little more. Here's your neckline on this inverted head and shoulders, by the way, left shoulder, head, right shoulder. That was quite clean. So we are not huge go in and trade reversal fans, but we recognize them when they're out there, and we use the HVF method of drawing them, which is horizontal line. Now, did this make its target? And as you will probably see, this is a very good target that has been made. In fact, that neckline draw that we elected to use is a very good one, and we'll knock that straight the way through there. So what's actually happened is a target for an inverted head and shoulders at roughly 6405 has been made. I've had this here at around the 71,100 level. You may recall we said first to 72,250 target is a key target, and there's your 7,300, 250 to 7,300. So the 7,250, 7,300 level has been made. That was your first make of it, a pullback, and then you grinded a small amount higher. That was the target for this inverted head and shoulders. That is now done. And why are targets great? Because they're good points to get out. That usually means much less upside gain to come trading to the upside, and plenty more potential for downside moves. Add to that, we're in the sell in May and go away seasonality coming up very shortly as we are in the back end of April. This is looking like a bearish bias, and certainly be cautious about bull positioning or a stay away general trade. So let's take this a little bit further into the price behavior. And we'll go into the daily. Here everyone got really excited about the RSI's first break way back then, and as you can see, they would have got out too soon as the market continued to go higher. That was a break, and as again you can see that also went higher. But what the RSI does show is that the momentum is lost. We're now right now at what would be called getting to oversold, I don't think it's oversold, because in the same way I didn't think it was overbought when it was first crossing over here. In other words, these are terrible measures that just show you the kind of momentum. The momentum was fairly consistent and high at that point. But over here, since then, we've been just going marginally higher, and that's the price action I prefer. This showing you as oversold. You could get a weak bear flag rally in here and then a proper spill down. I'll tell you why I think that is possible, because we're testing that channel low that you saw on the weekly chart there. If I just pull it through a bit, that's the draw, and it looks like it's a bit generously drawn, because that was maybe it's closer to that because of I was trimming the candles there, but give or take, that's approximately your line. So going back to the daily, what could be in play here? Note that this level was a 7100 level, was trimming these tops. Once again, let's show you the relevance of it. Trimming these tops, and was also just a resistance level that wasn't quite run, 7100 here. And if we go right out there again, it failed to make the 7100. That's that line over there. That's where it tapped out and just ran through the 7100. What are we seeing now on the 7100 if we zoom in? And some of you might be calling out left potential shoulder, marginally higher high head, holding a level, then spilling. Remember, this was an ascending HVF that was always going to be under threat to make it, because it had too steep a buy line underneath here. So it popped, returned to the funnel, popped, returned to the funnel, popped, returned to the funnel. Lots of support on the funnel, actually giving you an element of head and shoulder structure on a smaller scale here on this level 7300. Where did that level come from? That was your target of the inverted head and shoulders here. That's where that line came from. So actually, it's given you a neckline for this as a left shoulder, that as your head, a little bit messy, and that was your final right shoulder before spilling. Did that make target? It surely has on the Theresa May election shout. And that brings you down. That little target would have told you, once again, get out in and around here. You would have had a very profitable sell-off to the downside there, which incidentally, we mustn't forget, the pound in all this is largely doing the exact opposite. So this is a very global macro world where equities can flow in and out of money can flow in and out of equity markets and a currency. So the overall return is far more interesting than the at a global macro level, what's happening with the currency and equity. The pound spiked during this period. Remember our GBP Swiss franc trade, which made its HVF very handsomely with nice overperformance. Pound was doing that against the dollar as well, and of course to the downside against the euro GBP. So that was all happening. So let's get back to our FTSE chart, which so that was a good target shout and has got us there. So grinding, I think a grinding back up, possibly in a flag-like level, but then we have a new head and shoulder type structure. So I'm going to take this RSI away. It's misleading now as oversold, because you can get more oversold in the same way as I was indicating to you about how it was a bit too early on all the others. So we're going to just get that removed. So what you could have here, if we draw this for you, is your two head and shoulders, that one that's already performed, so that's old news. But there's your lefty and a bit of a convoluted right shoulder, which was all sitting on this ascending funnel level that you broke out from, which we covered in some detail off of this setup here. And then you get, of course, you always break with momentum when you have a key level of significance, and that's exactly what's happened, and it smashed it down. What you could now have, different color line, and we'll make it a red one, is a far more broad reversal pattern, call it, for want of a better phrase, a bunch or a nested set of head and shoulders. Pull those lines down a little bit so that we don't lose sight of what was going on there. And that neckline is here at the 7,100. That neckline that's 200 pips away from that particular neckline. And where would that take you? Well, it takes you a long, long, long way. And we'll do it in a dotted line so it's not too dominant. But that would take you in and around the levels down here. 675. 675. So that would be a dull summer with quite a bit of pain on the ratings on the UK FTSE 100. So if I just put this zonally around here, you'll see that this has been an area that we've traded at extensively before, in and around this zone. Put another dashed line roughly over through there to the 6750 zone. Change its color so it doesn't get confused with all the others. Make it a red because it's a potential downside target, nice and bold. And let's see where it's been significant before. And it's trimmed the tops of this extensive period, and it was the neckline of that left shoulder, head and shoulder breakdown over there. Yeah, and we can see also where it was relevant here and here as the previous highs. So it might be now old resistance turns a bit of a support period. So you'll just run this red line and then we'll once again start basing up. So this is quite a potential bearish call. That said, the long run targets of 9,000 on the super macros haven't gone away with this structure here with these sell-offs, but certainly, so that's the monthly charts, a bull, but certainly scope for a substantial pullback just through the 6,750s here on the FTSE. Just by the by, if we take into account the FTSE levels roughly at 6,750, and when we were last there, let's just take a random point and not be too precious about this, around there. So let's say it was the 6th of November. If we returned, we lost our line, 6,750. Let's put them back in there. If we returned to these levels, and this is true, it would imply possibly for the GBP, let's have a look at it, the USD, that we could be returning up to levels in and around here on the pound, so back into the 130s levels as well. So it was certainly post the initial Brexit, but then we had the Carney QE coming in, could bring the pound back up into the 130s, not a million miles away. 135s already from where we're at. So November, maybe not the best date to have chosen. I think we've got more upside potential on that, so that point's probably not well made. But I think with a sell-off there, it's probably a degree of currency effect that will no longer be making the FTSE as cheap as it has been recently. So maybe it's easier to look at this from a percentage perspective and to say if we had to give up 250 points or 350 points from 7,100, we'd probably be going up a similar percentage on the pound, give or take. So something to bear in mind for those of you who are trading of the pound and also the equities, the UK equities, possible sell-off. Okay, that's Francis. Next program, July. We're fully booked out for April. We're already taking July. If you want to come and learn more about how to trade the HVF method and transitioning towards being a full-time lifestyle-based trader, where you can walk away from that which you currently do. It doesn't happen overnight, gents. It takes a lot of time, effort, and patience at this to transition. But that said, it's possible and doable, and you need to become a specialist. You need to become really good at doing one thing really well. So get in touch and find out more about our program. All the best to you.